Hey guys, how's it going? Eli here, back with another video where today we're going to be having a conversation about 3 significant things that could potentially cause the Pokemon card market to really see a lot more blood in the market. Without further ado, let's just jump right into it. So as always, got to get out of the way, we are doing our weekly giveaways. For those who are wondering how you enter into those, all you have to do is be subscribed to the YouTube channel and leave a like, comment down below on any of the videos we post each and every week, Monday, Wednesday, Friday. Of course, we have 3 winners that are each going to be receiving 8 billion star booster packs. And then since you can comment and like on each of those videos, it allows you for up to multiple entries, 3 in total. So 3 ways to enter, 3 ways to win. So a lot of opportunities for people to win these packs. And then we just broke 2,000 subs. I can't thank everyone enough for the continued support. Once we hit 2,500 subs, then we're officially going to increase that amount to 12 packs each, grand total of 36 booster packs. But as you guys are aware, it is Monday. Monday is the day in which we announce the winners for the weekly giveaway. So let us do a little bit of a drum roll. As always, the 3 winners are Zach Nolan, Asa Walker, and then King Shinji. So shout out to you guys for winning the weekly giveaway. Of course, if you would like to know how to receive your packs, all you have to do is, if you're in the Discord, PM me. I'm pretty responsive there, probably the fastest in regards to response. You can also feel free as well to email us. Emails down in the description of our website, support@pokemartusa.com. You can try and reach out to us on Instagram. I won't be the quickest to respond there because I'm not on Instagram all the time, but I should respond to you nonetheless. But congratulations once again to you 3. Now we're going to get on to today's main topic. So about a month and a half ago, 2 months ago, I made this video where I said 3 potential kind of outcomes in regards to where I see there being a market bottom. And a lot of the factors that I really put into play were macroeconomic factors, because inevitably, as we've kind of shown when looking at the Google Trends chart, of course we can show that right now, it follows a lot of similar macro trends in regards to supply and demand, or more specifically supply side economic theory. So if we take a look, just Pokemon cards, looking at it over time in the past 2004 to now, you obviously see it follow a very similar pattern. You see it go up, you see it on a macro scale making a higher low, and then once again makes a higher high. And as you've seen, all it's done so far has just continued to kind of go down from a general demand perspective, of course. So, you can most comparably look at it to something like, I've shown this chart many times before, the psychology of the market. I'm going to absolutely botch the way to spell psychology. I profusely apologize for that. But we can just take a look and see what the chart shows itself. Follows very similar patterns to the way in which you kind of look at things. I mean, it's very much comparable. You can compare the same thing to a lot of the stock market charts. You can compare it to crypto charts, but it follows a very similar pattern to just kind of macroeconomics when looking at just the overall emotional sentiment of the market. And so with that being said, of course, we can talk about reprints. Of course, we can talk about what's going on with distributors and, the hype of certain sets. But ultimately, at the end of the day, one of the biggest macroeconomic factors in regards to the emotional appeal of the market is basically how's everything else doing? How's the stock market doing? How's Bitcoin doing? How's the price of items such as gas doing? And so that's kind of what we're going to be getting into today on 3 major things, in my personal opinion, that we're going to be talking about in regards to what could potentially cause this market to absolutely collapse. And this is going to build on, like I said, the video I posted about 2 months ago. So the first thing that we're going to be talking about the most is that not the most, but this is one of the things we're going to touch on, is the Federal Reserve approves first interest rate hikes in more than 3 years and sees 6 more ahead. So for those people that don't know, basically inflation has got about kind of gone out of control. Prices on a lot of items have gone up drastically. I mean, we've seen general inflation across the board reach a high of 14%, I think, on average. That's realized, not unrealized, which in individual items you've seen skyrocket higher, specifically specifically wheat, I think, has gone up 64%. You've seen milk go up a ton, chicken's gone up a ton. So individually speaking, you've seen a lot of that, kind of gain in price. Typically speaking, on average, you want around 1.5 to 2% for healthy economic growth when it comes to overall GDP spending. If you don't know what any of these words mean, you can go back and look at one of my videos. Like I said, I've talked about a lot of these terms in depth, but specifically speaking, one of the ways in which people, or specifically governments, like to counter inflation is basically by, you see, a raise in interest rate hikes. So this is kind of the expectation that a lot of people were having, because since it's gone so out of control, this is the only way in kind of being able to bring back a little bit of balance to the overall rate of inflation. Of course, then the question becomes, what is the best way to do it? We're not going to get into that. We're just going to get into the news of it all. And so basically what has currently happened is the Fed has decided that they are going to be going forward with a 0.25% point rate hike, which, as I said before, this is the first time we've seen this in, several years. Like I said, back in December 2018, so almost, 3 years now at this point. And then on top of that as well, they've also announced that you're going to potentially see even more rate hikes, as upwards of 6 by the end of the year. Of course, as you can see, this will now bring it into the range of 0.25 to 0.5. The move will correspond with a hike in prime rates and immediately send financial costs higher for many forms of consumers, borrowing, and credit. So that's kind of one of the biggest factors you're going to see. This is going to play a huge it's going to play a huge factor into mortgage, housing prices, credit card repayment prices, just general borrowing prices. So it's one of those things that when you take a look at how the United States economy runs, a lot of it is run on borrowed money. And so the general American is going to have a lot of products, prices go up, borrowing is going to go up. And that's, of course, going to play a factor into a lot of, expenses for other sectors of the market, such as the housing market, such as the gas market, and so many other things. But that's just one of those things that is going to play a huge kind of point in the slowing of the general economy. Now, of course, the question is this the right effective way to go about it? Obviously, we're a channel mainly talking about Pokemon. We won't get into it, but obviously, since they are doing it in increments of a quarter full percentage point, it's going to be a slow kind of bleed. And so you could see potentially the market go into a recession, and you won't see a full recovery for at least a couple of years, considering that they're not going to be doing this all at once. The Band-Aid's not going to get ripped off. So who knows what the ultimate kind of play is going to be at the end of it all. But I wouldn't be surprised if you could see more pain generally in the market within, like I said, the next year or two, if something like this were to just continue to cause prices to go up higher. Now, the next article I kind of want to talk about, and this is going to kind of lead into the point of the raising. Americans will feel the impact as Fed raises rates, and here's what you should know. This is going to more correlate to just the talks of the overall housing market. It's going to be even harder for most people to buy their first house when you're seeing something as pricey as homes, which we've seen, I think, in the past year, an overall 15.5% increase. You can look that up. Don't quote me on it. But that's one of the highest increases we've seen in a while. Obviously, demands played a huge factor. Inflation's played a huge factor. There's so many other factors that kind of go into this. But as far as it goes, mortgage rates have risen more than a full percentage point above 4% on a 30-year fix. It's made it even harder, and now on a $450,000 payment loan, with that 4% pushes the monthly payments up $325, which is a lot, especially if you're talking about general, middle to lower class Americans. Home prices, okay, so they've risen nearly 20%. Okay, there it is. So I was underquoting. It's actually gone up way more than that. And this article came out, how long ago? It came out 2 days ago. Yeah, so this is the most up-to-date. I think the article I was reading about it was about a month ago. So that just goes to show you how much things have gone up. Don't expect home prices to tumble, but HEP thinks that year they'll rise much less, around 3%. Of course, with that, however, one of the things I will preface with is, demand is obviously extremely high, But with that, I wouldn't be surprised if you did see an eventual slowdown of the market, and you're going to see cash kind of be one of the biggest factors in regards to how you're going to be able to compete in your home. Perfect example actually of this right now is my parents are looking to sell their house right now, and we've had multiple people offer them the opportunity to buy it off market, because we've had neighbors that are selling their homes for literally 1,000 square feet less than our current home evaluation, and the square footage, it's about 1,000 square feet less than our house, and they're getting offers for literally $900,000, and it's insane when they're buying that house literally 6, 7, 8 years ago for $200,000, and now they're getting offers that sold for $900,000. So it's just crazy to see how much the prices have truly gone up. And with the interest rates on that and the market being so hyper competitive, especially when we're talking about these kind of months leading into May, it's some of the most hyper aggressive times for people to come move. Same time goes with August. It's usually right before the end of the school year, at the start of the school year for a lot of families. But this is going to once again play into the factor of potentially seeing a hopeful downtrend, or at least a little bit of a pullback in the market as the overall interest rates are going to be rising. So of course demand is at an absolute high in regards to what we've seen. If you're taking a look at the overall index, it's just literally a chart going upwards on the average price of a home in America. But either way, once again, all that's going to be doing is increasing the bottom line for what the United States American is going to be having to spend on general expenses. And so one thing I will say prefacing this video, because I know people are like, oh, this might be super boring, I want to talk about Pokemon stuff, but hear me out on this. This is important for you guys to understand, because the general theme behind all three of these things that I'm going to be talking about is just general prices are going to be raising across the board. And when prices raise across the board, then you see a lot less people having money in their pockets to be able to afford luxury goods. And at this point, let's be honest, like Pokemon cards, as hard as it sounds, have started to become kind of a luxury good. And it's weird to think about it in that way, because you're saying to yourself, well, I can go get a new booster box for like $100 of one of the sets, Fusion Strike, or under $100, and some of the other ones, right? When you think about a lot of the older items and you've seen the price of them drastically go up so drastically, if I want to go relive my childhood and try and master set something like a Majestic Dawn, let's say, and I want to try and get a PSA card for it, or let's say I want to go in any other Diamond and Pearl era or EX era, or just any of those eras, like you're spending several $1,000s. And when I say several thousand, like that's for the ungraded cards, depending upon the era. Like if we're going Dragon Frontiers, obviously once you start getting into graded, then you're spending $5,000, $10,000+ to be able to afford a lot of these cards. And that's just not something that every single American's going to be able to do, versus 4 or 5 years ago, you're able to pick up level X PSA 10 cards for anywhere between $30 to $50, depending upon which one we're talking about. Now they're selling for anywhere between $7,000 to several thousand. So prices across the board are going to, of course, continue to increase with all these factors at play, and that's just going to mean that there's more expenses for less Americans to go out and spend money on other retail goods such as Pokemon cards. And that's one of the reasons why I really put an emphasis on investing in modern, or ultra modern specifically, is because it is the most affordable thing for the average middle class American and lower. Because let's be honest, you're not going to be able, not everyone's going to be able to go back and invest in like a first edition booster box, or a Diamond Pearl era booster box, or even an XY era booster box of something like say Furious Fist, going for like $800, $900, as low as $700 if you can get it. That's a lot of money for a lot of people, versus you say, okay, Eli, I can go pick up a Pokemon Center exclusive Elite Trainer box for $50. Sure, you can say to yourself, oh, it's only it's $50. You're not going to get the same amount of dollar return as you would investing in an $800 booster box. But when we're talking percentages, that's what matters at the end of the day. I'd much rather be buying 10 Elite Trainer boxes at $50 a piece, spending $500, right, and get a 20% return off of that, than go spend $500 on one booster box and only get a 5% return. The numbers are just not going to add up for that. So and the thing is how I like to look at it is the difference between investing in a full stock, let's say something like Apple or Tesla or Microsoft or any of these typical more expensive stock, or Amazon, I should say, more specifically, Amazon and Tesla, versus investing a fraction of a Bitcoin. Obviously, with Bitcoin, you're able to invest in fractionals, with typically speaking, you've never been able to do that with traditional markets. Obviously, certain places are offering that now, but the point that I'm trying to make with that is you're able to invest in things that will still give you greater returns, but you won't have to fork, a large amount of money up front. So that's one of the reasons why I put so much emphasis on ultra modern, because I want it to be something where people know that they don't have to have an insane amount of money to be able to invest in Pokemon product long term. And you're going to be able to see a lot of really good gains from what we've seen historically. Now, continue on to the main point of this, of course, is once again, the next topic we're going to be discussing before I get fully off topic is going to be gas prices. I mean, it's very inherent to see what has happened with gas prices. I myself drive a diesel. So in my town, actually, surprisingly enough, gas prices have kind of stalled. They've gone down a little bit, but they're going for around $4.20, I want to say, is the price of gas. And diesel's around $5.10. Sucks for me, but I have a fuel efficient car, so it's not the end of the world. But seeing your tank go from around $40 at most to fill it up, now all the way up to $70, we're talking an extra $30. I mean, that's expensive. And when you're talking about, a lot of Americans are living paycheck to paycheck, you talk about a lot of individuals are basically spending a lot of their job driving, that's going to increase the amount of spending in their overall budget or just expenses. And so Goldman Sachs basically came out and said that in 2022, they forecasted that 135 per barrel from 98, and it's a 2023 outlook to 105 from 115 to 2 from 105. But here's what's interesting. Because of everything that's been going on with the Ukraine crisis, I won't get into the politics of that, but basically they're predicting potentially that you could see the price of oil go up $200. This is something that's once again going to play a major factor into the expenses of every American. I think the price of oil, we can look this up, price of oil per barrel right now, I think it's around $100. You can correct me if I'm wrong on this. It looks like it's going for around 108 as it stands right now. So hypothetically speaking, let's take the fact of the matter that I'm paying around $5.10 for diesel and I'm paying around $4.20 for gas. Of course, that's a funny number. Sorry, I'm 5. But of course, with that being said, there's other people that are living in other states like California, New York, and they're paying, $6, $7. I know one of my friends that said they live in California. They saw a place that was selling them for $8, which is insane to me. So when you're talking about it going from 106, 108 to $200, that's nearly a double increase. You're talking double-digit gas prices. And when you're saying to yourself, right, you're going to be spending, let's say, you're going to the gas station, let's say conservatively, once a week, right? If you're adding on an additional, let's say $200, right? So you're spending initially, like I said, I was spending $40. Now let's take what I'm spending currently and let's double that, an extra $30. I'm spending an extra $60 a week times 4, because we're just going to say the average. That's around an extra $240 a month purely on gas. Then you say to yourself, let's times that by 52. That's an extra $3,000 that I'm going to have to be spending purely on gas alone, which is absolutely crazy to think about if the price does topple that. So you have obviously, a lot of factors at play, whether it be just macroeconomics having to do with the raising of, the interest rates, having to do with potential, housing prices considerably continuing to reach all-time highs. Hopefully, like I said, we'll see a pullback with that relatively soon as the interest rates are rising. And then once again, with everything going on in foreign affairs with Ukraine and potentially the price of oil going to, at the end of the year, God help us if it does get to that point, $200, all these things basically just reek of economic disaster. And so with that being said, of course, for those people that are affected by all these things, I want to say, it's tough and I'm sorry. Obviously, I've been affected by this, not as nearly as much as other people. And for those individuals that are kind of in the same boat as me, it's one of these things where it's like you got to be able to understand everything that everyone's going through right now. And so I just want to say that it's tough times, and we've seen a lot of things happen throughout this country, and I feel like we'll be able to persevere. But at the end of the day, this is going to play a large factor in regards to retail spending, in my personal opinion, especially what we've seen historically when looking at inflationary rates back in the 70s. So ultimately, the main point that I'm going to be getting at with this video is, once again, taking all these factors at play. I wouldn't be surprised if we truly saw, as interest rates continue to climb within the next, 6 times or so, because like I said, they're going to be increasing them in the span of, throughout the year. You could see the United States potentially go into a recession, and there's a lot of forecasts going into it. And I've shown, like I said on another video, some of the predictors that we saw for the 2008 economic crash. You've seen a lot of correlation in regards to that. Whether I'm right or not about it, obviously, I hope I'm wrong, because for most Americans, I would say I hope I'm wrong. I hope we can see a little bit of a destabilization or in the market, to where it's enough of a pullback to see a little bit of a reprieve on housing prices, make it a little bit of a more affordable. But obviously, with the pain that we're potentially going to be seeing, I don't expect there to be any easy times in at least the next year or two. And so for those people, of course, that are able to manage to juggle a lot of these price hikes and do have that extra money saved off to the side in regards to spending, this is going to be, hypothetically speaking, some of the best times and opportunities to be able to get in cheaper product, which is weird to think about considering how much the price of Pokemon product has gone up so much. But when you really just think about it, in regards to the just overall economic downturn, I'm talking more than just Pokemon. I'm talking about just general stocks having dipped. Obviously, we've seen that with the S&P, SPY specifically. You've seen that with NASDAQ. You've seen that with a lot of things absolutely crashing. You've obviously seen the price of crypto go down a lot. And, for the most part, there's so many opportunities in the market currently that we were not seeing literally as late as 6-7 months ago, to be able to invest in things. I remember back in I want to say Evolving Skies times, you were only able to find one booster box that was below $100, and that didn't last that long for Battle Styles. I think at one point it started to climb back up to 110, 120 again, depending upon where you were buying it from. So to be able to get this opportunity again, as it currently stands, and if prices continue to go down, because you do see the economy go into a greater recession, then obviously this is just going to be a massive buying opportunity if you have the money. Obviously, if you don't, completely understand that, because there's potentially hardship to come with a lot of people and what they're going to have to struggle with, and it's going to suck. But if you do have the cash, I would see it as ultimately a great opportunity in the long term to be able to invest in a lot of retail product, because I would not be surprised if you saw a lot of people start to offload a lot of their Pokemon collection and other product to be able to afford to pay for a lot of expenses that have just drastically increased within the past year and within the next year or two, based on what the forecasts are kind of telling us. And we don't know, as hard as it is to say, we don't know what's going to be happening in Ukraine for the next, couple of weeks, let alone couple of months or years, or however long this kind of crisis is going to be going on. So hopefully it ends sooner than later. Obviously, we want to see peace in the region, but that's one of those things where it's just out of my kind of call on being able to decide or kind of figure out what's going to be with that. But once again, the kind of whole point of this video is just going to once again be making kind of a wary tale of just what's potentially going to be coming into the market. I know a lot of people, of course, have been telling me, Eli, I don't see Evolving Skies prices ever getting below this point. I don't see Brilliant Star prices ever getting below this point. I don't see a lot of prices getting below this point. It's just it's very sentimental, or not very sentimental. It's very deja vu to me, I should say, because I remember back in the day when I was, first getting into crypto back in 2017, I saw the price of Bitcoin drastically go up all the way up to $20,000. And for a while, for those people that have been in the market for that long or even longer, the price went down to $6,000, and it kept, it would go up. It went up to 14,000 again, and then went down, and then went up to 10,000, and then went back to 6,000. But one of the things people kept saying is, Eli, it's never going to go below $6,000. It just would never happen, right? Like, you would never see that. And then all of a sudden you saw the price absolutely crash within the span of several weeks to a month, all the way down to 3,000. And then of course, it's kind of bottomed out there for a little bit, and then it went up again. And then you saw, the COVID dump happen, and the price went down to below 3,000 again. And a lot of people were like, well, this is crazy. I never thought I would see this happen again. You've just seen this time and time again, where a lot of people predict these things, and then they never have a backup plan to what happens if they're wrong. And that's the thing that I've learned a lot in this market. And I've shared a lot of, about my losses, and I've shared a lot about my wins. And one of the biggest things that I tell people about my losses, because I'm very transparent about it, is you got to be able to have a backup plan in regards to all this. Because I don't know how many times I've said to myself, I'm very confident, right, that the price of whatever item it is, it's not going to go below this price. No, of course not, whether it be a stock, whether it be a crypto, whatever it is. And I have this arrogant confidence because I've been trading for a while, and I'll be on a hot streak and I won't be losing. And then all of a sudden, stuff hits the fan, and I just absolutely get slapped in the face. And I didn't have a backup plan, so I take more pain than I should. Because of my immaturity, and I've learned from that, and I continue to learn from that because I'm still human and I still have those emotions. And so with that being said, it's one of these things that I just want to make this kind of video for those people that are basically unaffected by a lot of these things, or don't think that there could be price points. I just want you to prepare for this. And of course, people are going to say to me, well, Eli, if the price of Evolving Skies goes down to $100, of course I'm just going to buy it. Like, that doesn't mean that I don't disagree that it'll get down to that point, but of course I'm going to buy it at that price. But it's more than just that. It's just a bigger general picture of just, the overall sentiment in the market for those individuals that are not in that position where they're sitting on the sidelines with cash. They're in the position of where they're, taking, loans, or they're taking out, or they're biting off more than they can chew, or they're just spending money and putting it in places that they shouldn't, and then they end up basically FOMOing into higher level prices currently, expecting the price never to go down. I mean, you don't know how many times I've heard people say, I FOMO'd into Evolving Skies at 140. I FOMO'd into Evolving Skies at 150. I FOMO'd into Brilliant Stars at 130, 140. The amount of times I hear that, it's crazy to me, guys. And I don't want to beat up on those people, because I understand that, we're all emotional. We're all human. I FOMO'd in before. Thankfully, I don't do it as much as I used to. But at the end of the day, it's still one of these things that there's a lot of people that are not going to have the same kind of belief of, okay, it gets to $100, I'm going to buy now. Well, what happens if they don't have the money to buy now because they have all these expenses that just came up, and they allocated all of their funds to buying Pokemon booster boxes Evolving Skies at 150? I remember one of my buddies, when the crash happened for crypto, and I said, bro, I've been getting in crypto and I've been buying so much of it up. He said, I can't. Expenses have gone up, and I already invested at prices that were 50% lower now than what they were literally a couple weeks ago, and he's just having to hold because there's nothing else he can do, because he can't double down and invest in more because of it. And of course, he's a long-term investor, so he'll be fine at the end of the day, but he's going to have to go through a lot more pain because of it. So that's just very, something very important to kind of understand is, be aware of these things and be able to either have a set amount allocated on the side, or just have a backup plan in case prices do go down lower than you expect. But that's just kind of my personal opinion, my take on this thing, and more or less the wisdom that I've learned from my mistakes and other people's mistakes, and so on and so forth. But this video has been going for almost 30 minutes, so I want to wrap this up real quick. But the main kind of points that we're going to get to the video, because obviously I like to do the final wrap up, is 3 things specifically. One, obviously, we're going to be mainly talking about with this video the macro factors that are going to be affecting the market, because it's still important to understand that in regards to how retail prices or retail demand will go down. We took a look at the psychology of the market chart, compared it to the overall Google Trends chart, and saw that Pokemon market tends to follow a lot of the same charting patterns as, you know, traditional markets and cryptos and so on and so forth. With that being said, it's going to also play into a lot of macroeconomic factors. One, Fed raising interest rates, and they're going to continue to do that by the next year. Two, a continued demand spike in overall housing prices. As I've mentioned before, hopefully there will be that correlation where you'll see kind of a pullback in regards to housing prices because of interest rates raising. But of course, I'm not holding my breath on that. And then lastly, three, with everything going on in Russia and Ukraine, you're seeing a potential spike in oil to $200 a barrel by the end of the year. We're seeing at 108 right now, record prices. Within the time span in which we've kind of had it all go up. So these are going to be the main three factors that I'm going to be placing my or hedging my bets on, saying there could potentially be more pain to come. I'm never going to rule that out. Of course, I could be 100% wrong. I don't have a crystal ball. Not everything I say is 100%. It's not financial advice. I am not a financial advisor, but I still think it's one of these things that for those individuals that think the bottom's in or think that, you know, there's no more pain to come, you got to be able to at least have a backup plan and understand there's a lot of things going at play. And when it comes to increase in prices for the average American's wallet across the board, that usually is going to come with a kind of dwindling or diminishing amount of demand in regards to retail purchases, aka Pokemon is a part of retail. So you could see prices of Ultra Modern really start to drop more. With the overall demand, you could see, of course, older product prices start to go down if you do see panic selling. But once again, this is if these things happen. So, but it's more or less just a video, once again, to remind people that we're not out of the woods yet in regards to potentially the market finding its bottom. Because as I've shown in another video before, we've still got a long year of 2022 ahead of us in which we could potentially see more pain to come. But I know that was a long video. I know that was for a lot for most people. Of course, if this is a video that you find informational, please make sure to leave a like, comment down below. And if you do have any questions, any concerns, disagree with me, agree with me, please let it be heard in the comment section. I do sometimes have the opportunity to glance over them. If you want to discuss it with me over our live streams that we host Tuesdays and Thursdays, I'd love to do this with you then. But hopefully you guys find this informational, and it's not just one of these, oh, this is boring, Eli, this isn't Pokemon, this isn't reprint news, but it's still one of these things that for those people that do follow my channel that like to understand just, you know, overall investing, this is something that is a big factor at play in regards to just overall general macroeconomics. So I really want to, you know, once every other month, typically I'll make a video about this kind of stuff, just to kind of hammer down the point, because it's still something that is very important. I know it's a lot to take in, but as always, I make sure to give you chapters. I make sure to give you the main points and wrap up, so you can always just get it in a 2-minute, 3-minute kind of segment and get the main points of it without being completely overwhelmed of everything I'm telling you. But like I said, if you want to enter into our weekly giveaways, all you have to do is be subscribed, leave a like, and comment down below at any of the videos we post each and every week, Monday, Wednesday, Friday. Of course, each winner is going to be receiving 8 Brilliant Star Booster Packs, 3 winners, and then 3 opportunities to enter, since you can comment and like on each of the videos we post. So a lot of ways to win. But like I said, that is all I have for today's video. Thank you guys all so much for watching. Until then, I will see you guys on Wednesday. Peace.